Hello and welcome to this first lecture in this new module on asset allocation in this course on practical approach to investing your personal finances. So the purpose of this module is to give you some in-depth understanding of how can you determine the right asset allocation to help you decide where to invest your hard-earned money and maximize your returns. And specifically in this lecture, we're going to do three things. Uh, what is asset allocation? We will define that, have a common understanding. Then we'll look at what factors are necessary to consider for a good asset allocation. And then we will look at an overall process, an overview of a process to do the right asset allocation. So what do you think is the asset allocation? What do we mean by asset allocation? Any thoughts on this? See, the asset allocation is basically you have investors on top left and they will divide their wealth and invest in different asset classes because there are these options at least that you see here, and you will see that are many more options. You could invest in debt, you could invest in equity, real estate, mutual funds. So the total wealth available for investment needs to be divided into where should I invest is the question. Should I invest in debt, equity, real estate, everything, or should I invest in mutual funds everything, or should I divide them equally, or in what percentage? And that is what is called allocating the asset allocation for your investment, the money and funds available for investment. So what to consider for asset allocation? What are the factors that we should keep in mind when doing the asset allocation? There are four things that you see here on your screen. On the right hand side, middle, the most important thing is I see is your investment goal. What is it that you want to achieve and by when? And that will determine where would you invest. For example, if your investment goal is, if you are, let's say, 25 years old now, and your investment goal is to start saving for retirement, you are that kind of a far-sighted person. So then what you need to do is to invest in those kind of investments that will take time, that will be locked for time, and there would be a decent return, fixed regular return, and there won't be any risk for you. So that is the kind of a goal that the goal will decide the investment, and you might go for public provident fund, as we will talk about it later. The second factor is your risk tolerance. How much risk are you willing to take? When do you feel comfortable? Do you feel comfortable investing in equity? Because equity will go up and down. There will be times it will show you good gains, and then there are times it will show you 20-30% of losses. So are you comfortable going through these peaks and troughs of the wealth that you're accumulating? So that will determine another factor, that is an asset allocation. Third is the time horizon. Is it too much, 2 years that you want that funds to realize your goal, or is it like 35 years that you have for realizing your goal? And finally, what is your risk reward preferences? Like, are you kind of a person who says, I don't mind lower rewards, I don't mind small rewards so far as I can cover my interest rate, but I don't want to take any risk. So it linked to your risk tolerance is, so what is your reward expectation? These are the four factors that you need to consider in doing the asset allocation. So how do you do the asset allocation? Apart from being completely intuitive and going by the advice of the financial advisors or your parents or anyone else, how do you decide what is the right way to do asset allocation? So there are many people who say many things and you hear many approaches. And here I am showing you an approach that I have used for personal asset allocation as well as for some of my clients. So you need to start with understanding the goals. As we saw, goals are important, right? So first you need to understand that if you are going to invest a 500,000 rupees at this point of time, what do you want to realize with them? After the second thing comes is the time. After what amount of time, what is it that you want to realize? Third, then we need to understand your risk profile. Are you a kind of person who it doesn't really matter if the value of the portfolio goes down 20% in next 5 years and then goes up again, or are you very uncomfortable with this kind of variation? So what is your risk profile? Then we need to see where else have you invested your current assets, because that will determine. We need to keep a balance. If you invested everything in equity at this point of time, it would not make any sense to ask you to further invest in equity, given that your risk profile could be not that aggressive. Once we have these four information, we need to go for an overall asset allocation strategy. Which of these 5, 6 categories that you will see should we invest, and within that, what are the types of investment we should make? And then we determine what is your financing strategy, how much money you should invest in once go, and how much you should keep investing in the future. So that's the process of doing the asset allocation. So having looked at the overall process of asset allocation, what do we do next? So in the next, we get on to more details of each of these steps, starting with how can we understand, how can we define the investment goals. So thank you so much for watching this first lecture of asset allocation in this course on practical approach to investing your personal finances. I hope you're beginning to learn something new, beginning to enjoy, and I do look forward to see you again in the next lecture.